Hello? YouTube is being weird this morning. Anybody here? It actually said for a little bit live streaming wasn't available, and then when it finally did connect, then it gave me a countdown timer like I was waiting for the stream to start. So yeah, I guess you guys are here. That's just strange. So anyways, welcome currency traders. Glad you can make it. Glad you could be here. Happy Friday. Today I suggest we'll cover US dollar, Japanese yen, Swiss franc, Great British pound, euro. What else? Technical analysis, fundamental analysis. What else could we cover today? Yeah, the mic's a little far away. I can fix that for you. Maurice says, I caught so many ticks from your 1, 2, 3 move. Hey, you're welcome, buddy. Spend the money wisely. Anyways, 3, 2, 1. Oh yeah, gold and oil. Yeah, sure. Let me remind you that trading is risky, not appropriate for everyone. Your past performance, good or bad, is not necessarily indicative of future results. Please stay small, stay humble, focus on the long term, and never risk money you cannot afford to lose. Good morning. My name is Wayne McDonald. I am the Chief FX Market Strategist for TradersWay.com. They are the sponsor of today's webinar. Please show some loyalty and respect by visiting the Traders Way website at TradersWay.com. Check it out. If you're intrigued, it'd be great if you could open up an account. Maybe start with a demo. Just takes a few seconds. Then what? Test the execution speed, check the spreads, check the swaps, and when you fall in love, open up a live account when you're ready to trade real money. You can also download my chart templates. The link is below. Cost you $5. Okay. Cool. What else? I wrote a book. You can buy it. It's on Amazon. There's training courses, fxbootcamp.com, all that kind of stuff. So there's lots of resources to help you. Don't feel like you're alone. You are not alone. Anyways. Thank you, Traders Way. Cool. All right. Yen strong versus pound. Boo. Yen. Let's start with CAD. This was sort of the interesting one here. CAD was more bearish than many of the yen pairs, and it was sort of, I wouldn't call it the canary in the coal mine, but if this goes up above the sell zone, that would be very interesting. Because it was, I wouldn't say the most bearish, meaning like the CAD wasn't the weakest. It just had the most bearish sort of setup. And so I'll identify it this way. Okay. A top, obviously, right? A lower low, lower high, lower low. So something like this was pretty epically straightforward, right? So if we breach above that like this, I'm hoping all the yen pairs go. I don't expect that, but it would be very interesting. Alejandro says, why you never talk about Noki or Seek, Adani? Okay, I don't know. I can talk about them all day long. I'm basically a G10, G7 currency trader, but you like Thai baht, Alex? Here's the thing. Okay? And this might sound insulting. I don't mean it to be. For people that don't understand currencies, then what they do is they look at all currencies as kind of being equal. Like, oh, just trade Thai baht. Oh, just try the shekel, right? But they're not. They're not the same. And there are differences and all that kind of stuff. So you can totally trade them. That is totally fine. And I have actually traded all of those currencies, actually. But they are not the same. And, you know, there's more than enough opportunity in all the big, you know, major currencies. There's just more than enough opportunity. There's some other issues with the less traded currencies, and that's usually liquidity and costs and stuff like that. But there's nothing, you know, like I said, I've definitely traded them, all of those, right? Now, Norway, for example, their economy is based on oil, right? So there's some correlation there. Sweden, it's got a nice stable economy, all that kind of stuff, right? Hong Kong dollar, sure. Okay, especially now is probably a nice little mover. Singapore dollar is wonderful. There's a lot of correlation with the Great British Pound, right? Thai baht. I remember trading Thai baht yen, and I think I made 10,000 pips in a day, and it was worth about the same as a latte, right? So anyways, I wouldn't group them all together. And like you guys see that I don't even get excited about crosses, where you're like, wow, look at the pound Aussie or something like that. And I'm like, and the reason for it is you're taking away a lot of the fundamental and you're looking at it technically, and that's fine. But when you're only doing relative strength and you're not including fundamentals, then what happens is your analysis is late. So by the time you see that pound is super strong and Aussie's super weak, you know, if there's no direct fundamental reason for it, then by the time you see it, most of it has already occurred. And so you're always kind of late. So that's sort of another thing besides me not covering those, let's say, less major, the minor currencies, if you will. The reason I don't trade crosses is that like often there's no real fundamental play between pound Aussie, right? Like Aussie would be fundamentally one thing, pound would be fundamentally a different thing, and you smashing them together, because let's face it, the trade between Australia and the UK is not massive. It's not global moving like, you know, like other currencies anyways, right? So I would isolate. How about this? Instead of me talking sort of double negative, let me talk double positive. I will make a decision on the Great British Pound. Being one of the major currencies in particular, this is important. And from that, I'll say it's strong or weak, and then I'll go trade them. And it's not necessarily pound Aussie. I'm looking at pound versus everything. And then often what happens, I might trade pound Aussie, but someone else is just trading them because they see technical patterns. Well, I don't start with technical patterns. I start with fundamental patterns, and then I drop it, right? So it's kind of like, as they say in Canada, it's the same, only different. Okay. Rick says, I remember when I first started, I lost 3,000 pips, and well, it couldn't have been 3,000, maybe 300. Okay. Because USD yen only moves like 80 pips a day. And so if you were talking 15 or 20 years ago, yeah, it did move 300 pips in short order once in a while, but never 3,000. But if you're talking fractional and stuff like that, then yeah, you got to just be careful. Fractional pricing messes people up with their pips. Okay. Anyways, no big deal. But I right. And then you thought it was $30, yeah. Okay. So anyways, pound, this was also another disappointing one. Not surprising, but disappointing, right? Anyways, this is coming down, which is really starting to say, hey, it's probably time to take profit on a lot of these yen pairs. Danielle says, Wayne, let's say the whole year I will be a bear on euro dollar based on long-term trend. Okay. If I take only sell zones, what will my results look like the whole year? Well, that I wouldn't know, right? And will that be a good approach? Well, first of all, it would be a good approach because you can set things up in advance. You definitely know where you want to sell. You never confuse it with, oh, maybe I should buy now. Also, a major benefit of trading that way is if you ever do want to trade other people's money, they would be able to look at your trading and say, oh, I see what you're doing. I understand what you're doing. Most people's trading history just looks like a mess, like they're making things up. Okay? Okay. Why? Because I want it to go this way based on a portfolio. Okay. But I will remind you guys, 6, 7, 8, 9 months ago, I said I would seriously consider dumping my portfolio on the 3rd week of November. Can anyone confirm that? Okay. 3rd week of November to about the 3rd week of December. Okay. Anyone can confirm that? It's really the 2nd week of December, maybe even the 1st. Morning, Tony. I mean, it's pretty amazing that now it's the 3rd week, and, you know, that's why I'm seriously looking at some of these things. Yeah. So I have to make sure I understand where we are. So this little move is disappointing, but it's not surprising. And we're still inside the range, so, you know, it's not that surprising. And it's disappointing because I would have loved a rally like this, but you can't really expect that. Not in that technical scenario, right? We know using technical analysis that's unlikely. Because the thing that we do know that is technically likely is staying in the range. Okay? Cool. Somebody asked again about the CAD. So let me put this further out. I guess I have to change my template. Someone asked about monthly. Okay. So if you, let's see if I can, it's long gone. So I think somebody asked about monthly CAD yen. Can you still get to M4? Well, it's really late in the month. So typically if you're a bull, you'd buy here, and by the 2nd or 3rd week, you've already hit your target. That's long gone, right? And then this pair, you had the down and up, and then who sold here? Well, that's the monthly M3, and that's exactly where bears should sell, right? And so it's been bearish, and it's likely to remain bearish. So if you're a buyer, as the person stated, is there hope that it can get to M4 by the end of November? I said, well, you know, we got the holidays and stuff in the way and all that kind of stuff, and we still don't even have a proper bullish entry. So you're not long unless you bought here, right? But you may have gotten knocked out at break even on that, unless you haven't moved your stop. But it's dangerous buying when it's falling. Okay, so the way I teach you is it's better to do this. Okay, I'd rather be a buyer here, right? But anyways, so is there enough time? Probably not, since in the first 3 weeks it's done this. Is it likely to be way up here in the next week? No, probably not. But you could be setting up December. If you're a bull, you could be setting up December, and that just gets you from 81.50 to 83.50. So it's only 200 pips, and it's not much higher than the old high. Okay. Okay. Yeah. So if you sold here, this is a good price action trade. There's nothing much else to it. So there's an obvious sell. There's a roll reversal. And then this is just another roll reversal. Yeah. Okay. So that's a great straight up, straightforward continuation trade. Very cool. Nice job, Anthony. Morris has a question about carry trades and swaps and stuff. Can you be more specific? Okay, euro dollar, let's back this out. Okay. Let's see, where do you want to take it? Okay, still seems more bearish than bullish. Okay. Boss says, today I have live recorded my trading account and made 2.5% profit of the total equity. All right, you need to reduce your lot size. Okay, boss? Good morning, Daniel. Hey, have you gotten a hold of our friend, Daniel? So let's see. Yeah, so who? Morris Dwayne asked the question about. So yeah, Morris Dwayne asked more specifically. I don't know what you're talking about. Like, it's a very broad question. Okay, so anyways, euro dollar still looks like that. Yes, I think it was yesterday you showed how you capitalize on holding trades overnight. Yeah. Oh, yeah. Will Lagarde's speech have a positive impact on euro? I don't know if positive or negative, but everyone wants to know if she's going to change policy. So, yeah, Lagarde's speech matters. So, yeah, we can go back to swaps. So every single day you get paid a little bit. Okay? That's all this is. So you can see I've invested $476 of my money. Okay? Okay? So I have $476 of my cash invested. And I'm sitting on $3,300 in profit, of which about $750, almost $800 is interest I collected on my swap, in swap payments. Okay. So just in swap, it's pretty close to 200% or 100%. No, I wouldn't expect her to say anything, but okay. So these positions are all based on collecting the swap. That's all. Now, there was a time when Kiwi yen and Aussie yen paid high swaps. And you can see Kiwi, even though I've held it since the beginning of October, has paid me $1.37. So it's only paid me 1.5%, maybe 2%. Australia, I've held that since August. That's paid me 17% return on investment, which isn't bad. Let's say for 5 months, getting a 17% return. It's not bad. But these other ones are much better. So here's like, it's only been, what is that, a month? That's about a month. So almost exactly a month. I've held this Euro Turkish Lira short trade, and I've made 100% return on investment. 105. Isn't that amazing? I'm making 100% a month, only in interest. Just interest. So the way that you design these trades, if you're interested in true carry trades, is you go to your market watch and you can right click anything you want. So USD Singapore dollar, click on specification, and it tells you the long short swap. Okay, you see that? So in this case, on USD Singapore dollar, if I short, I lose money. If I'm long, I make a little bit of money, but not much at all. So one way you could look at this is every single day, if you're short, you're charged 6.5 pips. Okay? All right, on Junkie. Gary says it seems like free money. Well, I look at it as a bond. That's all. I'm receiving coupon payments, plus the value of my bond is appreciating. Because interest rates around the world are falling, so my bond is worth more. And the other reason I'm showing you this is, again, I've been trying to teach you that the Forex industry is a lot like the bond market. Okay? Max, are swap payments valued and determined minute by minute or end of day? It's end of day. It's that rollover. Yeah, rollover. Okay. So that's all. It's a benefit of currency trading, right? It was a. Have you ever heard of a fat finger, Ed? This was a skinny finger mistake. It just, this is my coaching account. And so for some reason it was set at that smaller instead of the larger. But so the way you look at that one, like, why is this one tiny? So this is up 320 pips. Okay. Even though it's only $32 profit, it's approximately 320 pips. So it was just a miss finger. So like this one's up 450. This one's up almost 400. This one's up 320 pips. This one's up 200 pips. This one's up 250 pips. And this is up 1,200 pips. Right? Plus $800 in interest payments. And I'll remind you, $800 on interest payments on $475 of cash. Not bad. Like I said, that that one pair has paid me 100% return on an investment in a month. It's nice, right? Gary says, I'll look into the bond market more. Yeah, well, that's part of like pricing, right? The bond market is priced based on the future value of coupon payments, right? Your future value of the cash flows. And then the coupon payment relative to market interest rates, which determines your yield to maturity. So you might have a 6% bond, let's say, pays you 6% coupon payments twice a year. So you earn 3% twice a year. But if interest rates rise, people can get a higher paying bond. And even though you're collecting the 6% till the bond matures, the value of the bond will fall and your yield maturity will fall. Or if interest rates fall, the coupon payments as a percentage are now higher than what the market is bearing. And therefore, the value of your yield will go up, pushing up your yield to maturity. And so that's the interesting thing. Like you could look at your Forex trading, like you could look at these as bonds. So like, let's look at this Euro Turkish lira trade. Let me go to my exotics. And that one I've been in for over 6 months. I have to back way out now. Okay. So about a month and a half ago, I put 2 trades on, right? Well, we'll look. Here's the other one. So you can look at this like I can be short this trade here for a very long time. Don't you stink? So the way I look at it is every single day I collect interest payments. And like I said, this was a $100 investment that has now paid me, right, $600. Already, I've already collected it. It's in my pocket. I can spend it. Okay? So my $100 investment has collected $600 in interest payments. And price is now down here. The value of my bond has increased. Okay? I've been paid this. This is my cash flow. Cash flow. And this will continue forever until I get knocked out. So I will continue to earn this cash flow. But now this is asset appreciation. Okay? And right now this has appreciated $1,200. I only invested $100. I can sell my investment right now for $1,200. This $600 is already in my pocket. So I have a total return of 1,800%. Okay? So I have to choose now. Do I sell my asset and collect the appreciation and collect I've already collected right? Or do I let this run? This represents, let's say, 1 year, okay, of cash flow. So if I take profit now, it's the same as if I held this trade short through all of 2020. Master Yoda, that's funny, dude. You're so funny. So anyways, right, you see that? So I have to choose. What should I do? Max says, what if your asset doesn't appreciate? So again, you buy a bond. Now, if your bond falls in value, you still collect your coupon payments, right? And you can hold it to maturity, and it just expires, and you get your initial investment back, right? However, Forex is different. Your asset can depreciate, and you're losing money in real time. So the way I mitigate that risk is I have my stop at break even. So I cannot lose money. That asset will expire, right, at the price I paid. That's it. Also, Turkey can raise and lower interest rates, which will affect my cash flow immediately. Okay? So cash flows can change. The time value of the cash flow diminishes the value. And of course, this asset could appreciate. And if it hits here, I lose nothing. Except my opportunity of cost, right? So now I have to make this decision. Should I sit on this another year? Okay. I think the actual results right now is 1,100% per year, if I remember this correctly. Okay. So right now, it's the equivalent. Like I'm indifferent. Financially speaking, I could take profit, I could sell the asset, and it'd be the same as if I held the asset for another year. But what if I held the asset for 5 years? Is it possible, guys, that this trade never comes back that far? Like maybe it goes like this for 3 months and then back down? Like, why would I want to get out of an investment that's paying me 1,100% guaranteed plus appreciation, right? Cool, right? Leonardo said, should we target 3% profits in our trades? No, you want to capture 100%. You want to capture as much as you possibly can. What we're talking about is 3 to 5% per month, right? Your account should grow by 3 to 5% a month. Yeah, pure mathematics says it's a good deal. Yeah, it's a pretty good deal. I don't want to get out of it, right? Max, you should never be one and done. If you're on a winning trade, guys, like think about this. I ask you to be a bull or a bear. So I'm a bear on this market, right? Which means I had to wait and wait and wait through all this and wait and wait and wait. So then when the market turns bearish, do I make one trade and walk away? No, you should be short here, 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 right? Again, here and here and here and here, right? And then unfortunately on these pullbacks, like this one got knocked out and this one got knocked out. So you should have at least 1, 2, 3, 4, 5, 6, 7 trades. 8 and 9 and 10 and 11 and 12. Okay? You see what I mean? When you're right, you need to be very, very, very right. And when you're wrong, you're break even. Is that helpful, Max? What do you mean in carry trades too? Why would I have something different, Max? Especially carry trades. Okay? But here's the thing. This one up here, let's do this in yellow. This one up here I haven't made a decision on. But these other trades are 99% chance I'm going to take profit on them. And this other one, I guess, these yen pairs, I'm going to bail on. Where are my yens? My yen pairs I'm going to bail on. Nick says, would I use a trailing stop? I hate trailing stops, Nick. I get out when I say I want to get out. Trailing, typically I've seen, is when people don't know how to make the decision, or don't want to make the decision, or are incapable of making the decision. I get out at profit targets, not right. I get stopped out when I'm wrong, not when I'm right. Let's put it that way. When I'm right, I'm hitting targets. Okay. So let's say I got an Aussie and a Kiwi going, right? Let's go to those ones. Aussie and Kiwi. Let's see. All right. So like this trade here, I will get out. I will get out of this trade. Okay. So right now, I'm playing it like this, but in the next 4 weeks for sure, probably sooner than that, I'm going to exit that trade. Okay? And of course, you should be long here and here and here, and the roll reversal, and then the doubled bottom, and then maybe nothing else. Okay? So I will exit this one. I'm just trying to squeeze a couple more pips out of it, and then I'm bailing. Adios, muchacho. Okay. It's all in my plan. The cool thing is I told you about the plan back in here. Okay. And we had this coming up and coming down. So we benefited from this. This big drop was not surprising. It's a little disappointing because some years it does this. Okay, but many, many, many years it does this. And we talked about that very, very clearly and multiple times in great detail. So this is the surviving sort of second chance. But I also talked about this period in the next 4 weeks. And by the way, let's say in March of 19, we talked about buying here, okay? And that in this period over here, I'd be taking profit. So it's this is my trade plan from 9 months ago. So it's not a surprise. I just don't know if I'm going to take profit on Monday or in 3 Mondays. That part I haven't decided on, but I will do it. Okay. Benjamin, I'm missing Benjamin. Oh, swaps pays most of the time. It pays every single day at rollover. You're even paid for the weekends. So on Wednesdays, you are paid for. So in Forex, there's settlement time. So even though we played Forex like a video game, there's actually a back office where things take time to settle. These are actually deals being done, right? And so there's something called T+2, which is a fancy name it's today plus 2 days. And these deals, these contracts are settled between parties. So there's a buyer and seller, right? So when you buy and then you take profit, you're selling your position to someone else, right? This takes 3 days. Well, today, There might only be 3 minutes left in today, or 3 hours, or 18 hours, but there's today. So at the end of the day, all these deals are put together, and then it takes 2 days to actually clear the trades. This is one of the reasons why you pay a broker, and one of the reasons why there's costs associated with trading. These deals actually, you have to remember, it's real money, guys, transferring between parties. This is a real deal, right? It's not a video game. This actually takes 3 days, today plus 2 other days. What that means to you is on Wednesday, you get paid interest for Saturday, Sunday, and Monday. On Wednesdays, you collect interest for 3 days. Now, here's the interesting thing. At 4:59 p.m., you decide to sell the Euro Turkish Lira. Okay? And at 5, you get paid 3 days worth of interest payments. And it's just a glitch in the matrix. It's just a glitch, man. It's a glitch in the matrix. So you just get paid. Now, if Monday is a holiday and banks are closed, then on Thursday, even though you've only held the trade for 1 minute, you will get paid for interest for Saturday, Sunday, and Monday, and Tuesday. So even though you've held it for 1 minute, you get paid 4 days worth of interest. Because now it's T+2 plus the holiday. So it's a 4 days, guys. You've held it for 1 minute and get paid 100 hours worth of interest. It's kind of cool. Okay? But like, as far as the mechanics, this money is already in my account. Okay? Okay? I've already collected it. So once a day, I get paid interest on everything I'm owed interest on. Okay? Now, if you're long, okay? If you're long and you have to pay interest, you should close your position no later than 4:59. And if you do, you don't pay any interest on your loan. Okay? So you might hold the trade for 23 hours and 59 minutes. Pay your loan back and you don't owe any interest. How cool is that? Oh, there's nothing magic about me, Benjamin. So try Glorious Wayne. But there's no magic. Thank you, Grumpy Cat. Yeah, there's only 42 likes today, so I don't know. I'm just answering your questions. So if you guys don't care about this stuff, I'm just answering questions. Trying to do my best to fill in the gaps for you guys. Wayne, how do you scale into your trades from the first? Every day is a new trade. Rick, my bias tends to last months and months and months. Sometimes years. So if I know I want to be long, let me just pick one, especially one that's not even that good. Let's do pound yen. Let's say I've decided I want to be long pound yen. Every single day, I'm buying pound yen. Okay, Rick? I'm not building a position. I'm building a portfolio. So there's daily. So let's say since the 3rd week of August, How many people knew in advance? Okay, how many people knew in advance as this was falling that on the third week of August I would start buying? How many people knew that absolutely 1,000% beyond a shadow of a doubt that I was coming in as a buyer the third week? And you knew it here and 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 here. These are all daily candles. But you knew weeks and months in advance that I was going to start buying right here. How many people? Well, wait, there's a bit of a delay on YouTube today. Jim says he did. Aye. Okay. So this is good. So I'm making a point for Rick. Okay. So 1, 2, 3, 4, 5, 6, 7, 8 people, 9 people, 10 people. All right. So I was effective as a communicator. This was falling like a ton of bricks. Now I'm going to tiptoe in and start buying it up. Cool. So Rick, from that moment forward, every single day, I become a buyer. And I drop into something like this. And of course, this is going to be meaningless. So hang on, I got to adjust. Let's go into a 4 hour, and it might work better. And then let me, oh, I know. We need more days. These are all daily. So 20, we have to go like 100 days. That might not even be enough. It's pretty close. Okay. It's really hard to squeeze this in. But you're going to have to go with me here. See? All right. There were many times in here, Rick, where, and I got, right? There's all lots of little buys in here, Rick. Okay? And all of these made money. And then they all have stops, right? And then there's a period where it comes down. I'm getting stopped out. And then it started going back up again. Every single day, I only have one plan on this, Rick. Buy the dip, 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 buy the dip. So when we were down here, and people probably thought I was crazy when I said, okay, third week of August. Now, I'll give you another example of how clear this was. This was the day I started the swing trading group up again after taking the whole summer off. Like now's the time to come back to work and get your job done. Pretty amazing, right? So from then on, every moment of every day I'm looking to buy. And you can imagine they all have stops. And then there's retracement, stopped out, stopped out, stopped out, stopped out. Okay? And then up again. And my message back here is you should have at least 10 trades open by the time we hit Thanksgiving. I'm going to ask this again. How many people knew well in advance, weeks if not months in advance, that your goal was to hold at least 10 long positions at Thanksgiving, at American Thanksgiving? How many people knew that as well? The goal was to have at least 10 trades open, long trades, by the time we hit the third week of November. If you remember that, say aye. Yeah, by the way, I changed the latency on YouTube and they said it would give better quality, and all it's done is put in a longer lag. So I got to go back to ultra low latency. But anyways, so that it's about a 30-second delay. But anyways, yes. Yep, I. Okay. Court says I can't. No, we're getting out, not getting in. Okay. So how cool is that? Not bad for a free webinar. So Rick, are you still with me? So Rick, the goal here is build large positions based on fundamental and technical analysis. So now everyone also knows that I'm about to dump the whole damn thing. Pardon my French. It's all over. There's no hope. And I often use the example of Buddhism, the idea of impermanence, of building something beautiful that you should be proud of. But pride is not a good thing. So like a sand Mandela, I am about to destroy everything beautiful that I made. And not only am I okay with it, it's a good thing to not be attached. What's the maximum amount of trade you enter on a pair? I want to have the smallest position as possible, Bitcoin. Okay? But what I want is somewhere between 100 and 200 trades open. Okay? Grumpy says, I think I have a 2-minute delay. Maybe. That's YouTube, man. So I'll put it back. I was just following YouTube suggestions. I don't think I ever saw, did Rick ever respond? Let's see, after all of that, Rick, people are funny. Didn't see his name. Okay. Benjamin has a 10. Well, you don't know the delay. That's the thing. So anyways. PJ says, Wayne, could the 5% growth target be higher on a spot scalp for income account separate from a swing account? No, it's all the same. PJ, you have to understand when you are planning on doubling your account every year, even that is insanity. And that's what 5% is. You're basically doubling your account every year. And when the stock market in a good year is up 22%, and you're like, well, I had an average year, I only made 100%. You're like already ridiculous. Oh, good. Right on. Thank you, Lucas. That's cool. How much do you recommend to start with? $10 million. Jay Millsberg. If you have $10 million, I would start with that. So there's only two things that determine how much money you'll end up with. How much, right? How much time and how much money did you start with? So the more you start with and the longer you trade, the more you're going to end up with. If your idea of making money through increased leverage is your sort of your thought process, then you will fail. Okay. Okay, cool. Let's take a look. Well, but that's what I would recommend. Because now at 5% a month, you would be making $10 million a year. So I would recommend doing that. So here's the thing. I mean, does it matter how much you start with? No, you're always going to have the same return. So I can't help it if you only have $250 and the guy next to you has $2,500 and the guy next to him has $25,000 and the girl next to him has $250,000. It doesn't change anything. Okay? If you're trying to make more than 100% a year, you're not hanging on to reality. You're lost. And you're like, well, Wayne, 100% a year is only $500. Then go get a job. You can't gamble your way into responsibility. Right? Okay. Giga says, Wayne, do you look at swap before you put in a trade? These trades are made based on swap. It's the whole point. So in a carry trade, absolutely. In the other ones, we don't really have, you generally not. It doesn't matter. The costs are so small. Okay? So would a trade deter me? Well, put it this way. My trade plans, let me do it this way. My trade plans are worth somewhere between 100 and 300 pips. So if it costs me 3.4 pips a day to be in the trade, do I really care? Cost of doing business, right? Jay Millsberg says, well, for a beginner, you should trade zero. You should have a demo account. So whether you're a beginner or not, what you're telling me is you might not have any money. Okay? If you have skills because you put in, let's say, Jay Millsberg, let's say you trade a demo account for the next 4 years. And over the course of 4 years, you spend 40 hours a week studying Forex. 4 hours per week studying Forex. This is the equivalent. You know what? Let's change this. That's too much because that sounds like a full-time job. 30 hours per week. Okay? You spend 30 hours per week for 4 years studying Forex. And that means taking training courses, having a coach, practicing specific skills with your trading. Not just sitting here trading. That's the dumbest thing ever, right? That's like golfing every day, but in 4 years you still suck as a golfer because you don't even know how to aim properly. You don't know how to hold the club properly. You hack and slice all over the place. You're like, well, if I keep at this, I'll get better. No, you'll just suck just as bad, right? I mean, training and coaching and focus. And you know how to carry trade. You know how to position trade. You know how to scalp. You know how to spot trade and day trade. You know high volatility events. You've figured out fundamentals. You've figured out seasonality and stuff. But for 4 years, you spend 30 hours per week, hardcore discipline focused on very specific and measurable aspects of currency trading. Okay? That's equivalent to what I do at Harvard. Except I've done it for 6 years now. Okay? I spend 30 hours a week doing Harvard stuff. Yes. Okay? And I've done it for at least 4 years. So Jay Millsberg, I would recommend that you hardcore study Forex for 30 hours a week for 4 years. And if you can prove to me you know what you're doing and that you're profitable doing it, then you should risk real money. Then you should open your account. And they're like, well, how much should you start with? As much as you possibly can. Sell everything in your attic. Sell everything in your garage. Sell your house. Live in a tent. Sell your car. Sell your bicycle. Right? Sell your dog. I coached and mentored someone who sold their dog to put the money into Forex, but not until after they have skills to make money. Okay? So many of you, if not everybody, starts with zero skills and you throw a bunch of money in and you lose. Huh. That doesn't seem surprising, right? Right? So that would be my advice to you, Jay Millsberg. Put no money in until you're amazing. Okay? Meanwhile, get a second job and for the next 4 years, save your money. Does that make sense? Save your money. Take a second job, save your money, so that when the 4 years is over and you graduate with your degree in Forex, now you're capitalized. Because remember, I said there are only two things matter to your returns. Okay? How much money you start with and how long you trade. How many years do you trade? 5% a month, 3% a month, that's great. 2% a month, that's fine. Do 2 or 3% a month for 5 years. Do you understand? Like, do the math. If you made 2.5% return per month compounded for 5 years, you will hit your financial goals. Okay? Giga says, do you have, I suppose do you have means is Trader's Way an ECN or a straight through processor? Let me tell you a story. Now, first of all, you can have an ECN account. ECN, you just sign up for it. So that's straightforward. But what about like non-dealing desk, straight through processing and all that kind of stuff? When the Swiss National Bank pulled the plug on their peg, pulled the peg on their currency against the euro, they shocked the entire world. And hundreds of billions of dollars was lost. And at least 3 major brokers around the world went out of business. Okay? FXCM lost $500 million in a day, in an evening. Drew Niv came to work and found out that even though he was the CEO of the largest Forex broker in the world, it just went bankrupt. Why? The Swiss National Bank. Okay? Drew Niv is no longer the CEO of FXCM, and FXCM no longer does business in the United States. That's how big of a deal this was. Alpari went out of business. Another pretty big broker. Okay? Yes, I do, Fed. So, Trader's Way was not impacted at all. Not at all. Why? They were not holding anybody's trades. If you told if you told Traders Way to long the Euro Swissy, they did. There you go. They were not holding you in a B book. They were not betting against you. Right? Now, FXCM, they told everyone they were a non-dealing desk, whatever that means. And yet, when the market collapsed, they owed $500 million. Why? Because those accounts blew up and FXCM was holding them. But they're like, but we're a non-dealing desk. Well, then why you lose money, right? So I actually contacted Traders Way and I'm like, are you guys okay? Like all these other big brokers are going out of business. Are you guys okay? They're like, yeah, we're totally fine. Why? I'm like, well, these brokers are going out of business. Clients are freaking out. You should send an email and say, yeah, everything's cool here at Traders Way. And they're like, yeah, that's a good idea. And I said, of course it's a good idea. So anyway, so they sent it out. They're like, hey guys, everyone's fine. Our clients are fine. Our accounts are fine. If you lost money, it's because you put the trades in, but as a counterparty, let's say, as your broker, we're fine because we just entered all your trades into the interbanking system like you told us to. For a broker to go out of business, it's because they were on the other side of the trade and suddenly they owe money. Oh. So that's a true story. That actually happened. And so you could use that as, your determination of, does Traders Way trade against you and your positions? Or do they simply enter your trades into the interbanking system? Or offer you an ECN account? It's your choice. But that actually happened. FXCM went out of business, Alpari went out of business, and brokers around the world lost billions of dollars. So, that's not used, right? That could be part of your due diligence, let's say. Giga, that is complete nonsense. That doesn't even make sense. Giga. Doesn't even make sense. But let me tell you though, there are very, 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 very big significant benefits to trading Forex, spot cash Forex over Forex futures. Okay, one of them is you earn interest, and I just showed you I'm earning 1,000% a year in interest payments. But there's also things like taxation benefits, leverage. So like a futures contract in the United States is leveraged 40 to 1, and a cash Forex trader is leveraged 50 to 1. If you're offshore, 100 to 1 is normal. Okay? So there are clear advantages, very significant clear advantages for trading spot Forex over a futures contract. Okay? And and things like not suffering rollover and all these different things is also another point, right? Jay Millsberg says if there's only one pair. So I wrote an entire chapter about that question, Jay Millsberg. An entire chapter answering the question, if I could only trade one pair, what would it be? It's not a good question. You're not even right, but it's a normal question. But that's a terrible idea to only trade one pair. So for example, what do you do if both of those currencies are strong today? What do you do if both of those currencies are weak today? What do you do if both of those currencies are neutral today? Those are three very common plausibilities that would lead you to either no trade or a loss. So now you only have what if the left pair is strong and the right one's weak, then you're going to make money if you're long. What if the left one, right, the numerator is weak and the denominator is strong? Then if you're short, you're going to make money. But there are 3 other scenarios where you're probably going to lose. So it's just a terrible idea, right? So maybe buy my book. Maybe. I mean, you're not going to make me rich, so I don't know. But yeah, that's a terrible idea to only trade one currency. Again, since everything we do is relative, picking one pair is just a dumb idea. Okay. So anyways, well, let's pull the plug. I hope you have a wonderful weekend. It seemed like hardly anyone liked today's webinar. That's terrible. 68 likes. It was really thin today too. Not many people. So I guess everyone's enjoying the weekend already. So I will change the latency back. YouTube said, hey, you should update the latency. You'll get better quality. And of course, the quality went down significantly. So I'm going to change it back to what we had. The connection is excellent, and I'm broadcasting a full everything, and so that's good. So it's not me, it's them. So we'll put it back. So thank you for being here. I tried to answer everyone's questions. We talked about a lot of different things. So that's cool. Hope you have a wonderful weekend. Yep. And I will work on creating the Black Friday special that you requested. I talked to the programmer about it, so he's doing some tinkering on that. So I will see what he's come up with over the last 24 hours. Cool. HH, let me know what your thoughts are. Email me, wayne@fxbootcamp.com. Okay, HH. Cool. So, peace on earth. May the pips be with you. May our profits be above average. And I guess I'll just see you tomorrow. Yeah. All right. Cool. And boop. Boop.